Did you know that during the 2008 financial crisis, the S&P 500 dropped by nearly 57%? While millions of investors panicked and pulled their money out, others seized the moment and came out wealthier than ever before. So, how do you invest during a market crash without losing your mind and your money? Let's break it down. Welcome back to the channel, everyone. Today, we're diving into a topic that has left many investors feeling uneasy. Investing during a market crash. When the market takes a nosedive, fear and uncertainty set in. It's natural to want to retreat, but market downturns can actually present some of the best opportunities for long-term financial success. If you know how to navigate the chaos, you could come out ahead. So, how do you do it? Stick with me, and I'll show you. Let's be real. The idea of investing during a market crash sounds counterintuitive. Most people think, why would I invest when everything is crashing? Shouldn't I wait for the market to recover? This is a common misconception that holds many investors back. The reality is market crashes are temporary, but the opportunities they create can be long-lasting. When fear takes over, investors tend to sell at the bottom, locking in losses. The challenge is in overcoming that fear and sticking to a solid strategy, even when it feels like the sky is falling. So, what strategies should you use when investing in a market crash? Let's go through a few tried and true methods that can help you not just survive a crash, but thrive during one. First up, diversification. It's an old adage, but it holds true. Don't put all your eggs in one basket. When markets crash, different sectors and asset classes react differently. Stocks might plummet, but bonds or even certain sectors like healthcare or utilities might hold their value. By spreading your investments across different asset types, stocks, bonds, commodities, real estate, you reduce the risk of losing everything if one area takes a hit. Next, value investing. Market crashes tend to drag down the prices of even strong, healthy companies. This means that companies with solid fundamentals, good earnings, strong management, and a sustainable business model may be available at bargain prices. Think of it as a clearance sale for stocks. Legendary investors like Warren Buffett have built their fortunes by identifying and buying undervalued stocks during market downturns, knowing that these companies will recover and thrive in the long term. Now let's talk about dollar cost averaging. This strategy involves investing a fixed amount of money at regular intervals, regardless of the market's ups and downs. When the market is down, your money buys more shares. When the market is up, you buy fewer. Over time, this strategy helps smooth out the price you pay for your investments, reducing the risk of making one big purchase at the wrong time. It's an easy, low-stress way to invest during volatile periods. Finally, maintaining a long-term perspective is crucial. Market crashes are a normal part of the investment cycle. They happen every so often, but history shows that the market always recovers and grows over time. If you panic and sell during a downturn, you risk missing the eventual upswing. Stay focused on your long-term goals, and remember that what happens in the short term is just a blip on the radar. To illustrate just how effective these strategies can be, let's take a look at a real-world example. Back in the early 2000s, the dot-com bubble burst, wiping out billions of dollars in value almost overnight. But during this time, savvy investors like Jeff Bezos, CEO of Amazon, doubled down on their investments. While many companies failed, Amazon, which had lost 90% of its value at one point, not only survived but thrived in the years following the crash. Investors who recognized the long-term potential and held on, or even bought more, reaped massive rewards. This example shows the power of staying calm, investing wisely, and trusting the process. So, what have we learned? Market crashes are inevitable, but they don't have to spell disaster for your investments. By diversifying your portfolio, looking for value opportunities, using dollar cost averaging, and keeping a long-term perspective, you can navigate downturns with confidence. The key is to stay calm, informed, and strategic. Remember, every crash is followed by a recovery, and those who stick around often come out stronger. Now it's your turn. Have you ever invested during a market crash? What strategies worked for you and what didn't? Let me know in the comments below. And if you want more tips on investment strategies and navigating market volatility, be sure to check out my next video on smart investing during uncertain times. Don't forget to hit that subscribe button and turn on notifications so you never miss an update.